Hey everybody, welcome to Mortgage Today for Friday, October 18th, 2024, and oh, what a day it was. UMBS opened up 12 basis points this morning. Nice to see it in the green. S&P futures were up 12 and a quarter points. Thursday's data delivered on the high risk front with a big move for the bond market, but not nearly as much on the reward front. Specifically, the rate sheets didn't move nearly as much as the market suggested. That makes for a very compelling lock opportunity, especially for the risk-averse crowd who didn't happen to lock yesterday. It continues to be the case that the biggest moves are a risk after the biggest economic data, and that the first 2 weeks of November should be extraordinarily volatile. Housing starts came in at 1.354 million units, which is more or less flat on a month-over-month basis and year-over-year basis. This was below the 1.4 million street expectation. Building permits came in at 1.428 million, which is down on a month-to-month and year-over-year basis. Again, this number came in below expectations. Multifamily construction seems to be falling the most, while single family is flat to rising. Multifam starts are down 15.7% year over year, while single-family starts rose 5.5%. Homebuilder confidence rose in September, according to the NAHB Housing Market Index. While housing affordability remains low, builders are feeling more optimistic about 2025 conditions. Industrial production fell 0.3% month over month, while manufacturing production fell 0.4% month over month, according to the Federal Reserve. Western Alliance, which is a big warehouse bank for mortgages, is reported earnings yesterday. Mortgage originations rose 21% on a quarter-over-quarter basis and 10% on a year-over-year basis. Gain on sale margins fell to 20 basis points compared to 26 basis points in the last quarter. From the Bowtie economist, this is kind of interesting. While inflation is barely 2.5% year-over-year, unemployment is just 4.1%, and incomes are rising. Voters are sour on the economy. Here, I think, is why. Median income in 2023 rose to $80,610, but it's still below the 2019 $81,210 inflation-adjusted peak. And sure, overall inflation is low, but year-over-year, food and energy, things we buy all the time, inflation peaked at 40%. 40% in 2022. Its worst showing since 1979. Bonds were technically a hair weaker in the overnight session, but even if they never improved from those levels, yields still would have been inside the prevailing range. As it stands, they did improve a bit, ultimately hitting 4.063 on the 10-year at the lows and holding near there through the close. MBS picked up a microscopic gain as well. All of the above is perfectly reasonable considering the lack of motivation in economic data. Today's only report, residential construction, hasn't moved markets in well over a decade. With that, we're back to waiting on relevant data, with the next notable installation not arriving until Thursday. So bonds closed the day up 3 basis points at 99.48. If you have some time over the weekend and you want to learn something new, check out the series from our sponsor of The Secrets of Sand Hill Road on wellthatmakesense.com. So if you want to stay in control, you are looking at possibly getting some outside money for a business you're working on, you definitely want to check out these reading notes for Secrets of Sand Hill Road, which is all about venture capital. Looking at next week, not a lot of data, but tons of Fed speakers, so the Fed guys are getting paid. So basically, Monday, Tuesday is Fed speakers, even into Wednesday, mostly Fed speakers. We do get Beige Book on Wednesday, which might move some things just because of the absence of data. Thursday, we get jobless claims, which is always a mover, but we also get global services PMI. And then on Friday, we get durable goods, CapEx, and then University of Michigan conditions. So should be relatively stable, but who knows with how things are going lately. If you have some extra time over the weekend, check out our common sources and influence. You'll learn a lot, especially our sponsor at wellthatmakesense.com.